Happy Tuesday once again, members of the Altcoin Buzz Army. Matty here with you in today's second video, and I'd like to launch into a few brief updates. We're going to look at Chainlink and a couple of other projects, but right after that, I want to really dig into the meat of today's topic, and really all I want to do is discuss kind of openly with you guys this concern that's been floating around for me personally for a while when it comes to macroeconomics, and I imagine some of you have felt this as well. The topic of inflation, which I think has been exacerbated recently in these last few days. Of course, we've been hearing about the hack of the Colonial pipeline in the eastern US. Purportedly, that's led to a lot of supply shortages, and in some cases, you have gasoline stations, at least ostensibly, that have gone dry completely. People waiting in line multiple, hours just to get gasoline, and many stations running out completely of their supply. This kind of goes hand in hand with a lot of other topics, in my opinion. There's this UBI problem that's surfacing where people are getting complacent. They don't seem to want to work despite the fact that there are jobs open for them. You also have ongoing pandemic issues that are affecting the economy. You have also other shortages because certain industries have been affected more than others, and therefore the prices of just about every commodity out there in the world has, really spiked up dramatically, especially lumber, which is up something like 300 or 400%. So we're going to be discussing all that. I really just kind of want to get your collective opinion. I want to kind of shoot some ideas your way and maybe start a discussion with you guys. First and foremost, though, I do want to acknowledge the fact that the market kind of 24 hours after yesterday's dump is up. Nothing crazy, but up moderately, up 2.4%. We're back up to $2.536 trillion, which is nice to see. Just a lot of green. So look, guys, never financial advice, but when I see some of my favorite projects that are have gone on deep discount and that there's just like a flash sale, if all they're doing is following Bitcoin's crash and there's nothing kind of like, germane to that particular project, then why not just buy them up at 20, 30, 40% off, whatever it may be. Taking a look at the big winners here in these last 24 hours, Yearn.finance, that's YFI, up 43%. EOS up 41%. SafeMoon, Arweave, OMG, Huobi token, others. Why not? Polygon up nearly at $1 again, 98 cents. It's up 14.7% on the day. So that's pretty good to see. Never financial advice, but even when we see moderate flash crashes, I just treat that as a shopping spree, right? It's a flash sale. Why not? Unless there's an underlying problem with the specific asset that you're interested in, why not? It's like we gave the example before of, let's say you're in the market for a Lamborghini. Since we're in the crypto space, we'll talk about Lambos. If you say, okay, I'm going to be spending, I don't know, whatever they cost, $200,000 on a Lamborghini, and then all of a sudden one day it costs only 150K, right? So it's down 25%. If there's no problem, like at a functional level with the car, and you were still going to buy the car at $200,000, why not just pick it up at 150? It's a bit of a weird example, but that's kind of my outlook when it comes to stocks and cryptocurrency assets. You have to be a bit of a contrarian, right? You always buy the dip. That's how serious wealth is made. You got to buy when blood rather is running in the streets. Blood I look at as money sometimes. But let's discuss a couple of updates here with regards to Chainlink, which is in the news. So at Chainlink on Twitter, Chainlink oracles enable smart contract developers to both fetch external data and perform secure off-chain computations. And in this tutorial, you can learn how to compute on weather data to enhance an on-chain crop insurance contract with more dynamic real-world analysis. Chainlink is just unbelievable in terms of the number of applications and the versatility that it offers. So off-chain computation, statistical analysis with Chainlink. If you're interested, I'll link to this below. Chainlink, I believe, currently in place number 11. Yes, sir. So up 7.4% on the day. Not too bad. Currently at $48.61. Not financial advice, but I think Chainlink has a lot of runway left. That's a bad analogy. I think it's going to fly very high, and I think it's actually running out of runway. Whatever metaphor you want to use, I think the price of Chainlink is going up, okay, to put it simply. Aluna Social here is in the news. New month, new goals. Here's what's coming up for Aluna Social. ALN listing on PancakeSwap and Swapper. New NFTs, non-fungible tokens. Partner farming pool, so for example, DAO to earn ALN. BitMEX copy trading and new DeFi Whale Watch leaderboard. More on that is available. You can join them on Telegram here. I'll link to this as well in the description below. This is the Aluna Announcements Telegram channel. And finally here, before we launch into a bit of an informal discussion, a wide-ranging discussion of inflation, we have Uniqly, which is partnering with one of our favorites here. So Uniqly is proud to announce their partnership with Enjin. Uniqly will be building on Enjin's Efinity blockchain to ensure faster, smoother, and more secure transactions for our NFT ecosystem. And together, we will push the technical boundaries of NFTs. So 2 projects that we're extremely excited about. Enjin, of course, we feel is about to take over the world with their NFT, their non-fungible token initiatives. Kudos to both parties. Uniqly partners with Enjin to bring physical NFTs to Efinity. Awesome. All right, let's kick things off with a reference to actually one of my favorites that I don't talk about much on the channel because for the most part, Tim Pool covers matters that pertain to politics and kind of social justice and that sort of thing, cultural issues. But I would say more and more over the course of the last, I don't know, maybe like 3 to 6 months, Tim's been getting into these discussions with his guests about, economics, so macroeconomics, right? Fiscal policy, monetary policy. And he's been getting more into cryptocurrency. And he's been kind of this unofficial champion of decentralization via blockchain tech. Ian Crossland, who co-hosts the Timcast IRL podcast, is I shouldn't say very big, but he's an enthusiast of cryptocurrencies. He's somewhat knowledgeable, so the topic comes up every once in a while. And this is a guest, I'm sure you recognize who's on screen right now, but Tim has been teasing this for a few days now. So he had on in yesterday's podcast, Max Keiser and his partner in crime and in life, I believe, Stacy Herbert. And it was one of the better podcasts that I've seen recently. So again, I don't talk about these kinds of issues, even though they fascinate me, but social justice, politics, it's like, all right, you guys don't tune into that. You don't tune into an altcoin YouTube channel for my commentary on that. But here's where everything is kind of converging a little bit. And Max and Stacy aren't really into altcoins. Maybe Ethereum. I'm not quite sure. They're, I think you could call them Bitcoin maximalists, so BTC maxis. But their message is one that we can all relate to, even if we're, BTC minimalists, some of us in this space, I'm sure. This was a great episode. So first of all, I recommend you checking it out. I'll link to it in the description below. Max and Stacy brought up a number of incredible issues. Number one, all of this, the context of this discussion, it kind of hinges on what's been happening in the United States with the Colonial pipeline, right? With this hack. If you're not up to speed, Colonial pipeline, it's this major, I think like 5,000 mile pipeline that just spans across like the eastern seaboard of the US. And that was compromised. That's been shut down by hackers. Now the hackers didn't shut it down, but you had this hacker collective or I don't know, some group called DarkSide, right? They create, they produce, they write code that turns into ransomware. They sell that to their clients. One of their clients used that against Colonial Pipeline. The people over at Colonial recognize the fact that, all right, we've been breached, we're compromised. So as a result of being hacked, Colonial made the decision to shut down the pipeline. As per Al Jazeera here, petrol shortages, so gasoline, sweep across US as Colonial Pipeline remains down. 4 days into the crisis, Colonial Pipeline Company has only managed to restart a small segment of its pipeline as a stopgap measure and doesn't expect to be able to substantially restore service before the weekend. And we've been hearing reports about gas shortages purportedly. I can't speak to this personally. I haven't seen it, but anecdotally, I'm hearing about gas stations that have completely run out of gasoline. Maybe if that's something you've encountered or you members of the Altcoin Buzz Army have heard about, if you live across the American Eastern Seaboard, I'd love to hear your perspective on this. Please comment below. But, this has had a pretty significant impact on the markets. And these aren't exactly crypto numbers, like Dow is down 1.36%. All right. NASDAQ barely down 0.09%. S&P down about 0.9%. Nothing too crazy, but unfortunately in the traditional stock market world, this is really sending jitters through Wall Street, through the stock market. And as per ca.finance.yahoo here, so stock market news live updates, stocks post back-to-back sessions of declines, and Dow drops by the most since February, unfortunately. This is front page news here, in fact. So stocks end lower as inflation worries intensify. Dow slides 1.4%. And I suppose, what's significant here is that it's now been a couple of days in a row. But look, the point that Max brings up, and Stacy, because they obviously talked about this whole issue with Colonial Pipeline. This is not like an isolated incident or an isolated variable. This is something that connects with everything else that we're seeing, and I think we're kind of feeling right now, to be honest, at a gut level. We've been talking about the rise in commodity prices recently. That's part of the equation. There's a lot more. So I've written down a few factors here I'm going to address. Number one, Max rightly points out, in my opinion, that the US has an infrastructure problem at the level of its top infrastructure, right? So I am talking about roads and bridges, and probably the same is true in other Western countries. In Canada, it certainly is. We have, oh my God, our potholes here, where maybe some of you can relate to this, but the potholes that for us here are just part of like daily life. And I'm talking about potholes, big dips, big holes in the road that are caused by ice freezing and then thawing and then freezing again and then expanding and contracting. Like, our roads look like the third world. It looks like we're in the middle of a war zone. If you were to judge our society on the basis of our road quality, like, we're like less than third world, fourth world, whatever that would be. So infrastructure, generally speaking, in Western parts of the world, but let's talk about the US right now, is in bad shape. So that's roads, that's bridges, but it's also critical infrastructure. And a pipeline is key critical infrastructure, right? So the same thing goes when it comes to hospitals, when it comes to power plants and pipelines. Actually, Max and Stacy brought up something that I've never even heard about, but they were talking about just how antiquated a lot of the infrastructure is. In the case of Colonial Pipeline, and I imagine similar services, they're running software that is so old that I'd never even heard about it. It's called Cobalt, I believe. Stacy brought it up. And I, when they said like, yeah, this stuff runs on old software, I was thinking, well, what does that mean? DOS or something? Or I think Ian brought up Unix. I'm not really familiar with either, to be honest. I've heard of DOS, obviously, and Stacy says, no, Cobalt. It's something from like the 1970s that so few people still remember actually like how to even use, that it becomes this like security via obscurity, right? Like, it's such a random old dinosaur system that like people aren't even like alive anymore that know how to code in it. So that's a problem. It's kind of like that old meme, that old joke about like the nuclear submarines, like the most sophisticated armaments in the world being powered by like floppy disks, that's the failsafe. So that's one problem. A lot of the stuff is just outdated. And not that you can decentralize a gas pipeline, but it shows how vulnerable some of these centralized systems are, that a malevolent hacker can go in and then just bring like the eastern seaboard to its knees. And it's not just the price of gasoline. So now you have gasoline prices, right? The prices are you have gasoline shortages. So the prices are going to go up. It's not just that. It's the price right now of transportation, of everything that is transported via freight. Those trucking companies now are going to have to pay higher fees in gasoline, which means the price of just about everything else, every other commodity, food prices, you name it, is going to go up. We're going to take a look at that in just a minute. But infrastructure is a big problem. And Max and Stacy rightly point that out. They identify it as something that's just a dinosaur right now, unfortunately. Another problem, and this is kind of the lens that they look through, as per Mac's money printing gun here, is fiat currency. Every problem that it seems the world faces right now, and the Western world, but I'll kind of dumb it down to the United States government, the Federal Reserve. Every problem that we face these days, it just seems that the answer is every single time, well, we got to print more money, right? COVID hits, the pandemic strikes, we got to print more money. Wall Street's not doing very well. We got to print more money, right? We have this issue now with Colonial. Not that they're necessarily going to print money to deal with that, but like Max's point was that this all started really back in the late 80s, where you had almost the introduction of like helicopter parenting in an economic context, where you had in the late 80s a crisis that was looking pretty bleak, and Max was working on Wall Street at the time. And you had Alan Greenspan at the time really suggesting a lot of intervention. So intervention on the part of the Federal Reserve, helping support the failing banks and the failing institutions. And really ever since that time, he's described it as this like phony or crony, really, capitalism, whereby we're not letting the failing institutions fail. Even more recently, the last economic crisis, for example, when you had all these banks that were negligent in their duties, that were basically criminal in the fraud that they perpetuated, they got bailed out, right? No bankers went to jail. none of the criminal banks went under. They were bailed out. They were allowed to exist. They were supported. And, there's similar stuff going on now where in Canada, I just saw something earlier, a proposal about how airports, and understandably so across the country, are just suffering. They're economic black holes because people aren't using them. So they're totally insolvent. And then there's this new proposal for hundreds of millions of dollars to prop them up, to support them. I don't want to see them fail, but like these zombie corporations and these zombie entities that, Max and Stacy kind of point out, where all but for the graces of the federal government printing money and supporting them, they wouldn't otherwise exist. This is a problem. We can't just keep throwing money at every problem that we have and not expect inflation to skyrocket to unprecedented levels. Again, we're going to take a look at some of those commodity prices in just a moment. But that really is the elephant in the room that they bring up in this interview. Inflation and the problems that fiat currency are introducing now into the world. And they're multivariate. And even, they talk a little bit about some of the social issues and the political ideologies and the division that exists, especially across the United States right now. Max's contention is that these are problems that are perpetuated by a fiat system, which is in itself something that is based on falseness, that is based on dishonesty, and that perpetuates violence in the form of, what the petrodollar does, wars around the world. That's a much deeper and darker can of worms. I don't really want to get into this now, but it's food for thought, certainly. And the money printing doesn't help. Max making light of it, of course, with his money gun, but it certainly doesn't help. So look, this is a great interview. I'm going to link to this in the description below, but I want to move on to some of those other issues that I teased a moment ago. Let's discuss commodity prices here. We're on Axios.com, the wild ride of pandemic consumer prices. So take a look at the price changes during the pandemic here. Laundry equipment, that's gone up 29%. Car and truck rental up 24%. Major appliances up 19%. Propane, kerosene, and firewood, that's up 15%. Pork chops up 11%. Used cars and trucks, that's up 10%. And just on that second to last point, pork chops, I found this extremely interesting. So this is a related point. Anthony Pompliano here on Twitter. Tyson, which is the nearly $30 billion food supplier, raised its prices by an average of 7.5% last quarter. But inflation isn't here, right? So he's pointing out a very interesting graph here. Tyson raising its beef prices by, what is that there, 7.5%. Pork up 17.2%. Chicken, 7.8%. Prepared foods, 8.2%. International and others, 3.5%, for an overall average of 7.5%. That is across the board the average by which Tyson is raising its food prices. I think equally fascinating here is you take a look at the prices of kind of commodities and services that are not in demand right now, and the free market is really pricing them accordingly. So take a look at women's dresses. That's down 14% in price. Public transportation down 15%, maybe because of subsidies, I'm not too sure. Men's suits. I can't remember the last time I wore a suit. Those are down 17%. Telephone hardware down 20%. Airline fares down 25%. When it comes to telephone hardware, that I find interesting because kind of exacerbating all of these other problems, we also have the chip shortage that's happening right now out of Taiwan. Max and Stacy talked about that as well. We're experiencing a global supply shock and shortage of chips. Those go into everything today. You have a bathroom scale, it has a microchip in it, let alone your telephone, your cell phone, right? Let alone your car, your computers, all kinds of other equipment that you use and, what we would call necessities today. So, very rightfully so, everybody's covering this. BBC.com stock market slide on fears of rising inflation. Here we're on financialtimes.com, FT.com rather. Wall Street stocks join global sell-off as inflation debate intensifies. Key measure of market expectations for price growth hits highest level since 2006. And then we have the New York Times. Stocks tumble as inflation concerns resurface. Live business updates. Now, look, I don't want to sound like I'm all, doom and gloom here. I have been, personally and more publicly talking about inflation for a couple of years now. For me, the answer has been cryptocurrency. I was into gold in 2006, 7, 2008, because I understood even at that time, kind of on the initial round of quantitative easing, I realized look, if this is all they're doing, right? If they're just going to print money to solve these problems that at the time we were facing, I'm going to invest in gold, because obviously these actions are going to dilute the value of the money supply, and $1 is going to be worse, is going to be worth less rather afterwards. But gold didn't do it for me. It was overly manipulated. I don't know. I felt that there was less of, I felt less that I had less direct control over my gold investments. It was very bureaucratic, a lot of corruption in that industry as well, and just not my cup of tea. So, I kind of made a little bit of money in gold, but then lost interest, to be honest. And then ever since, not ever since, because there was a span of a few years in between, but fast forward a few years, cryptocurrencies to me have been the answer to all of these problems, or at least most of them, in the economic sense that we're facing. But you have a lot of other economic advisors that I got to give kudos to that have been, suggesting that, look, if you, in the last year, that is, if you want to kind of hedge your bets and take a look at some stocks, look to commodities. So look to some of those things that, we covered here, or that Axios, I should say, covered. Things like food, things like lumber, especially, things like precious metals. There's some crazy performance recently by elements such as graphene and uranium especially. Maybe that's getting a little bit esoteric. But commodities have been a very safe bet that I think are going to continue to pay off if you're looking for a hedge against inflation. Not financial advice, but I just want to give kudos to those analysts that have rightly pointed it out. So look, guys, I don't have an answer to these problems. The issues that we're facing are going to be extremely challenging to overcome. I think we've been kicking the can down the road for like years, more than years, like really for generations. So I think we may be in store for a pretty bumpy ride. I think the bumpiness is going to intensify personally, but just want to throw it out there. I want to kick off this discussion. I'd love to hear your thoughts about inflation. How have you been protecting against it? Is it something that maybe you've experienced in your life? I'm talking from like a Canadian, an American perspective, but maybe you live in Turkey, maybe you live in Venezuela, or Zimbabwe, or Iran, or other countries where inflation has been more of a daily reality. You've already coped with it. You've kind of defended yourself against it. If that's the case, I'd love to hear your story. But just throwing it out there, guys, I would love to hear your thoughts about these issues of inflation, how we deal with it. And do be sure to check out this podcast in full. I will link to it below. No giveaway in today's video, guys, of Ethereum. We already gave away $50 worth of ETH in today's earlier video. Check that out above. I also highlight all the rules as to how you can enter. Every day we give away $50 worth of ETH. You may as well throw your hat into the race. But guys, there is so much happening in this space, so follow us on all the regular social media channels. Our website is altcoinbuzz.io. Keep checking into that for all the latest. Like, subscribe, share, hit the bell to receive notifications if you enjoyed today's video. None of this is financial advice, of course, it goes without saying, but I have to say it. With that being said, however, I do wish you all the very best of luck if you do choose to invest. Happy Tuesday once again, members of the Altcoin Buzz Army. Stay safe. And as always, we hope to see you again soon in our next video. Take care.